Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 10th of December, 2019. We're talking volatility. We're talking markets, levels, and an update as we go through the last month of the year. December typically does have a bullish tilt to it. That was not the case last December, but we'll see what happens in the next few weeks as we push toward the holidays and the end of the year. The main thing on our mind right now, it's not the market, it's the volatility index. Because despite the fact, we'll just kind of pivot back and forth with the S&P 500 into this 3150 and 3100 level, we're getting chop, 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 or range contraction. If you see this on the hourly chart, that's where the fun begins. If you think volatility is fun. And that's because we're getting lots of rapid price movement and even overnight gaps. This is leading to choppy price action on the chart, but it is giving us lots and lots of volatility and interest. Although today was a doji, was a flat session where the opening was right about where the close was. Quick update on the market. The S&P futures were up 1.5%. Nasdaq futures at 0.10. And the Dow, same 18 points in the Dow. The Russell was actually your strongest market of today with a 0.20. We are massively unchanged with our intraday market. Other than that, crude oil also unchanged, gold as well. This is where our attention is. It's the volatility index. So Don did a video recently with discussing the unwinding of the VIX or volatility positions. So traders, you might see them getting long volatility when they think the market top is in, or at least a retracement, or to hedge portfolios for a possible downdraft in the market. So VIX call options or volatility calls do go into the VIX index. It's your OEX options. So we've discussed this concept of when the VIX gets to a low relative level, be it about 12 or 1150, that changes by year, but mainly right now we're looking at that. So roughly 1250. 1150 is sort of an extreme, but those lows in the VIX volatility index, at least on the daily chart, in 2019 have corresponded or correlated with the future being quite volatile. We might call these VIX pops or volatility pops. It's a burst or increase, rapid increase in the VIX in volatility after a period of stability. On the chart, these look like this. So I know that the downdraft or sell swing in the market is not going to be the same percent or same change or same interest level in the VIX. Nonetheless, very low and sustained VIX readings do precede or at least go before, correlate with, correspond with recent pullbacks or I'll not say tops in the market, but retracements taking place. That's why a lot of traders will get long futures or get long VIX futures, VIX ETFs, or call options in some method to protect themselves or hedge accounts or long positions from pops or snapbacks in the market. The two biggest ones were in May and July of 2019. The September sell swing, not much to write home about. And if that's all we get, right, in terms of the Thanksgiving pullback and retracement and gap and volatility, if that's all the VIX is going to spike and forecast a market pullback, well, that's why you might see some traders unwind their VIX positions and do so quickly. Nevertheless, that is a warning sign or a caution sign for the market. So we will be watching this closely, TheoTrade, given that we have a VIX pop signal that didn't really do much for the market. So peaks in the VIX on these volatility pops have been roughly 21, 22, well above 20 on the three most recent pops. Not even halfway there, at least from the pogo or pivot or burst off of 11. So that's a thought process into the VIX. Just careful, cautious, and watch this development as we push through the next couple of weeks in December. We have this thing called the Federal Reserve taking a policy announcement on Wednesday, which is, as of this video, tomorrow's session. So we will cross-check this with our data from the CME group. What are the rate probabilities of a rate cut, or I guess keeping the rate the same? It's 97.8. There's a 2.2% chance that they will raise interest rates, which, hey, that's pretty interesting. Nevertheless, this is our target rate, and in the future, and the volatility and how we look from this CME group website on the VIX, or not the VIX necessarily, but the Fed tool, Fed forecast, Fed funds rate forecast. So that's what we're looking at there. We are not looking for any type of change in the Fed funds rate. That won't surprise us. What we are interested in the announcement and the press conference from Chair Powell is any type of announcement or policy change or headline with respect to the future of the economy. We had the good jobs report on Friday, so maybe that will play into some of the comments. Of course, the Q&A session, but I think what's on traders' mind right now is the repo market. So without discussing too much about that, the repo repossession market, that's needed some bailouts from the Federal Reserve. So that's a behind the scenes metric that is taking place within our current environment. Beyond that, the volume continues to decline. That's a function of the end of the year for the most part, but we are being cautious, careful, and protective or defensive into this 3150 level. So we may continue to see range contraction, or what we call filling out the range. And you might be able to see that a little bit better on the hourly chart. It's chaotic, it's choppy, it's lots of gaps, but that is a defined range, at least between 3150 and 3100, with a little bit of a nip beneath it on Monday's session under 3100. That's our S&P levels. For the Nasdaq, similarly, we are watching 8,500, or really 8,450, just shy of 8,500. The pivot off of 8,180, and the midpoint roughly 8,300. Similar metrics in the Nasdaq volume. For our Dow mini futures, that pivot remains 28,000. I always focus on simple levels. They're easy to remember, easy to write down, but actual trades take place into these zones. See them as zones. A price can push a little bit above it and then snap the other way. It doesn't have to turn exactly on the dime, but it's just a key reference point. For Nasdaq, for the Dow futures, that is 28,000. And under that is roughly 27.6. So a 400-point range the Dow futures are filling out. The interesting thing about the market right now is the Russell. I know this looks bullish, but if you pull the perspective back on the Russell, then you'll see it well beneath its 1700 and 1750 trading contract high that was made mid-2018. So we are not at those highs that we are in. This is a weekly chart again. The Dow mini futures, the Nasdaq, and the S&P. Keep in mind, if you're looking for a type of scenario or environment of this melt up, we had that back in 2017. It's not common to get two melt up years back to back. Of course, we have that 2018 volatility, but nonetheless, you can see how the market can keep trending and not really give us those decent pullbacks. These, I would say, these are decent, reasonable pullbacks. We like pullbacks because they get rid of some of the excess, this uber bullishness, and they give us chances to put on longer term positions, longer term duration buys into pullbacks or retracements, especially in ongoing trends. The same would be true in general stocks. Tonight's video, I wanted to focus mainly on the VIX and the market itself, but similar logic would take place within your leading stocks. Again, the stocks we mentioned in the videos of the past that are making new 52-week highs and pullback plays, in-out spreads, or vertical positions into the pullbacks of those rising stocks, because that which is strong tends to get stronger. And we have a few candidates, again, from the scanning of stocks at new 52-week highs. But maybe more on that in a later video. For now, take care, be safe. This is Corey Rosenblum with your Theo Nightly video for the 10th of December, 2019.